So let's talk about what this banking giant has just said about Bitcoin. And speaking of technicals, here's a pretty good one. The 20 and 200 moving average on the weekly scale. And Bitcoin has just formed a golden cross, something that has never, ever, ever in history has ever done before. That's very bullish. This is something that Bitcoin has never, ever done before. Formed this golden cross between the moving average of 20 and 200 on the weekly scale, right? That's pretty bullish. Now, as for this banking giant prediction, there's a lot of predictions out there. Recently, Standard Chartered has become very, very pro Bitcoin. This is coming like out of their CEO's mouth. This is not just some analyst that's saying this. Standard Chartered's CEO is very bullish on Bitcoin, and more so now because of all the excitement over Bitcoin spot ETFs. So previously, Standard Chartered came out with a prediction that by the end of 2024, Bitcoin would be at $100,000, which makes a lot of sense by the end of 2024 because that's after the halving event, and that's when we go into that parabolic phase leading into 2025, right? But now they have upped it from 100 to 120,000 by the end of 2024, another 20%. And they went on and predicted that Bitcoin will be at 50,000 by the end of this year, which isn't too far off now. We're like mid-July, closing in on August, okay? I mean, these are really solid predictions. These are not the unbelievable predictions that we have heard of before, like ex-Coinbase co-founder saying Bitcoin will hit $1 million in 90 days. Like, that's just too unbelievable. But for Bitcoin to hit 50,000 by the end of the year, considering we're closing in at 31 once again, right? We're 30, 31. To go up about, 50% from here on to the end of the year? That's believable. And then to double from about 50 to 100, 120 by 2024, certainly believable because we have the halving event next year, right? So these are good predictions, good numbers. And this is coming from a bank that holds $800 million in assets. So not the biggest bank out there, but they're certainly no fish fry. So that's awesome. There's just a lot of enthusiasm. FOMO is really building, okay? Not with retail investors. Here's the thing. FOMO's not really building with retail investors. You could see it. If it was, then alts would be blowing up right now. But right now, alts are not. So it's not retail FOMO right now. It's institutional FOMO. Institutional FOMO always comes first because they're the big money. They're the smart money. They have been doing this a long time, right? And they can see trends, predict trends. They're not always accurate, but this is the one sector none of them want to miss out on. And I think a lot of them feel like they have because they missed out on the last run in 2021. And a lot of them have been sitting on sidelines since 2017, watching. They're like, this is enough. We need to get in before 2025 happens because this next time there will be so much money in this space. They'll look fools. They'll look like fools because they missed out once again, right? So that's why there's so much institutional FOMO at this point. Maybe we don't have retail FOMO yet, but the holders still continue to buy and store, basically, right? 6 months, within the last 6 months, we have seen 500,000 Bitcoin leave the exchanges, okay? 500,000, not $500,000, 500,000, because there's just more and more accumulation. That's it. It's really that simple. And 92.5% of all Bitcoin that will ever be in existence have been mined. Oh, that's pretty loud. Sorry about that. There's only about 7.5% left, okay? And that is spread across 100 years. Most of it will be within the next 2 cycles. But after that, then the amount that gets released becomes very, very little. Very little. And even now, you could argue close to 93% that there will ever be is already out there. And a lot of it is lost. A lot of it is held by the early guys. A lot of it is held by the miners. And now a whole lot of it is being held by institutions. So if you take all of those things into account, there's really not that much for regular folks like you and I. So that's why it's time to it's time to get in if you're not in, and time to keep accumulating if you are in. The hash rate of Bitcoin also, speaking of miners, it just keeps going up. We're at an all-time high once again. It just seems like we keep forming all-time highs. Bitcoin is the only crypto where the price trails the hash rate. It's the only one. And think about it. Bitcoin's hash rate is at an all-time high. Bitcoin's price is not. So there's a big difference there, and eventually we'll catch up. As for other macro news, what's interesting is China. China has been going, at least their factory orders, has been going through deflation. And those of you guys that know the difference between deflation and inflation knows that deflation is much worse than inflation. That means that there are just no orders in this case. Okay, demand is so low that things are getting cheaper because there are zero orders or very, very low orders, right? And that's still the case because their PPI, unlike ours, is in the negative. Okay, so that's showing true deflation. However, supposedly things are improving. And if things improve and China starts getting their orders up again, that shows that the global appetite is increasing. But right now, it's looking pretty dire over there. But we know that China is trying to go very pro-crypto at this point. That's why they opened up basic crypto trading and all these other services in Hong Kong because they want to do that big push. But kind of interesting to see that. 15 CBDCs likely by 2030. Not sure that this is good, but CBDCs are definitely coming. There's a lot of countries talking about releasing a digital fiat equivalent, okay? A digital dollar, a digital yen, a digital euro, digital sterling, digital whatever, ruble, right? It's all coming. Now, keep in mind, when you have a digital fiat controlled by the governments, okay, and central banks, they're not the same as Bitcoin. People have asked me that in the past, right? Is this going to hurt Bitcoin? No, because Bitcoin is still non-sovereign, uncontrolled by any government or entity, right? You can't apply policy to it. You can't just create more out of thin air, like what the central banks have done over the last few years, creating trillions upon trillions upon trillions and just releasing that and dumping that onto their citizens.